records that are visible to the public if you know where to look. They're not hacking. It's not illegal. You're not breaking into some hidden records, because if you do that as an investigator or even as a client, if you obtain records illegally, you get in trouble and you can't use them in court. Even though you might think, well, the private investigator can hack something or get some secret records or to mislead somebody, you can't do it. There's laws against it. So how do you get it? Well, there are many places where your banking information becomes visible to the public. One is when you use your banking information in a public sector. For example, every banking transaction creates what's called a SWIFT code. And that SWIFT code is a record that banks use to exchange information amongst each other to verify, did you pay that person their interest? Did they check their balance? Do you owe me an ATM fee? Did we transfer funds? It creates a SWIFT code. And those SWIFT codes many times exist outside of a protected environment. You're not hacking anything. You're not breaking into anything, but they exist outside the protected environment. And those can be used to identify locations for bank accounts. What financial institution has a banking account? Another place it exists could be check verification. You know, when you write a check at a private company, you go into Walmart, you go to Costco, you write a check, that retailer is going to use a check verification system to make sure your check is valid. It's going to transmit information back and forth. Many times in that transmittal process or in that transaction, it creates a record of that bank account outside of the private banking system, and those records become visible. And if you know how to observe them, you can pick up on them. More importantly, many transactions leave a paper trail of bank accounts. Look, everybody has a bank account for a reason, because they pay bills, they write checks, they use their ATM card. What do you use it for? Think of all the places you use it. You write a check to the dry cleaner. You pay your car insurance. You pay for your house payment, your HOA fees, your property taxes. You give a check to the landscaper. Every one of those transactions puts your banking information outside of private information. It's not just at your bank and inside your checkbook. It's outside of that. Many times, that creates a record of the transaction outside of a privately held system. Let me give you an example. We were searching for bank records for a person who was trying to hide these records very well. But unbeknownst to him, every time he was paying for his auto insurance, he was doing it in a way where that transaction was not fully secured or encrypted, which happens a lot. And that banking information got out into the public, and if you know where to look for it and know what the patterns of bank account records are and bank account syntax is, those can be searched. And you can find them. Sometimes you can find them in just open records. Sometimes a property deed or a closing statement or a settlement statement will have somebody's banking information on it. Not supposed to, but many times it's leaked. Again, it's not hacking, it's not getting information that's supposed to be protected, it just hasn't been redacted. So there's where you can get bank account. So that's why it's important to search for all of the different types of records. Here's another way that sometimes you can find banking information. We looked at some property deeds for a debtor who we knew owned property, and we had a copy of the deed, but we didn't stop there. We didn't just look at it and say, okay, the deed shows that this person owns it. If you really look hard at a property deed, you can do what's called title forensics. And on that deed, there's a lot of information. Of course, it will have the name of the seller of the property and the buyer. It will have the legal description of the property, what the address is, where it's located. It will have a description of the transaction. But if you look closely, at the top right-hand corner, there is a block that's called a send to block. What that means is after that deed is recorded by the clerk or the county recorder, whoever does it in that jurisdiction, it's actually sent back to the buyer or the buyer's representative. Usually it's a law firm or a title company or a bank or an insurance company. And that send to block could be a direct access to a bank, or it could be a place where if you search that company, you can find where there's records of the debtor doing banking. Maybe it's an insurance company and you can find insurance payments. Maybe it's an escrow company and you can find wire transfer information. Maybe it's an attorney and you can find other representation of that attorney that reveals banking information. But look down further on that deed. You're going to see that every time somebody signs a legal document, in most cases it has to have a notary and 2 witnesses. Who are the witnesses? Well, it could be anybody. They don't have to be an official. They don't have to be an attorney. They just have to be a person that signs saying, yep, I saw this person execute this contract. So if you look at property deeds of a person and you look who the notary and the witnesses are, then you look them up. A lot of times a person will have something notarized where it's cheap. Most notaries now charge $5 or $10 to do a notary. But if you go to the bank where you have accounts, it's free. So many times, not only because it's free, but also convenient. Look, if you thought right now, where are you going to get something notarized? Where would you go? There's not a company that's a notary company or a building in a strip mall that says Joe's Notary. Notary is usually part of another business. It's usually somebody who works in a mailing shop or a credit union or a bank or some other company that happens to have a notary stamp, and you can go pay them to do it. Most of the time it's at a bank or an insurance company. So when you look at the notary and you look up that person, maybe on LinkedIn, maybe on Facebook, maybe online, you'll find that that person is an officer at XYZ Bank. Well, there you go. That's their bank. Banking information. Maybe the witnesses work at a bank. Maybe the witnesses work at a credit union. So how else can you find banking information? What if you can access payroll information from their employer? Many times if you have a judgment against a person, you are allowed to get employment information to show their income as part of the debtor's exam. Well, most people nowadays have direct deposit. So if your debtor has direct deposit, now you know where the employer has to send the money to every week or every 2 weeks. That's where an investigation looks for needles in a haystack. Direct deposit from an employer. Here's another place for assets. Look, everybody that is out in the world buying and selling things at any given time is going to come across an opportunity to get some kind of financing or debt. When you buy a car, you're normally going to get a car loan. When you buy a house, you're going to get a mortgage. If you go to Macy's to buy a jacket, they're going to ask you, do you want to open a credit card? When you go to Home Depot to buy a truck full of 2x4s, they're going to say, hey, if you open a credit card, we'll give you 10% off. How many times have you heard that? Every one of those transactions requires a credit application. Some of those applications are done electronically. Some of them you have to fill out a piece of paper and write down who's your employer, who are your banks. Look at a credit application. It's got a place for list all your banks, usually 5 or 6 banks you have to list on a credit application. That information is now in the public domain because that car dealership that took your application, they have that piece of paper. They're usually not required by law to have to keep it private. Now, they may not just hand it to you over the counter, but if you have a valid judgment and you have an investigator looking for records, think how many people have your copies of your tax returns. Your accountant, business partner, spouse. If somebody purchased a vehicle and was a co-signer on a loan, or they had a co-signer, the other person has a copy of that application. The finance manager at the dealership has a copy. The lender has a copy. There's all kind of places where banking information is out in the wild. Here's the reason we describe that. Because there is no secret search where you can just type in somebody's name and their bank accounts pull up. It's done through an investigation. It's very productive and very successful, but that's how it's done. Let's look at another asset class that people think about is intellectual property, like we talked about. We had a case where the debtor really did have little money. They had a couple thousand in the bank. They had an old car that wasn't worth much. They rented their house. They had a jet ski that was probably worth, a couple thousand, but, our creditor client didn't really want to grab a jet ski because they had better things to do with their time. And they were owed a little over $10,000, $11,500 I think was the exact amount. So where are you going to get the money from? The person really doesn't have it. Well, this person, for a living, did vehicle repairs. They had a little shop that they rented, didn't own anything, had a toolbox, and they fixed people's cars for them. And the way that they got business was they had a Facebook page and an email. Joe's Auto Repair at gmail.com and a Facebook page. And he did some minor advertising to local dealerships, local auctions that needed cars fixed up outside of their facilities. And they emailed him, "Hey Joe, I got another car. Hey, how much does this cost?" And he also had a phone number. All this was listed online on his Google My Business page with his identity. Those two items, his Google Voice number and his Gmail address, don't seem like they're worth a lot of money. But what our client did was, once we found them and connected them to the debtor, is to make a claim with Google and the web domain provider to say, we have a debt against this person. These are their assets. We're intending to seize their assets. We want to have control over this, their email, their Facebook, and their website, and their Google Voice account. The judge signed off on it because they had a valid judgment. Before the attorney presented this to the various tech companies to take over these accounts, they went to the debtor and said, "Look, we don't really want to take over your email and your phone number, but we just want our money. You owe us $11,500. If we don't get it, we're just going to take this over, and who knows, maybe we'll get leads and contacts and we'll sell them to some other company. Maybe we'll open up our own repair shop," kind of bluffing a little bit. But knowing that those intellectual, intangible properties existed allowed, again, a settlement where we were surprised. The debtor came up with $8,000 cash. I don't know if they borrowed it, they had it hidden under their mattress, who knows. Came up with $8,000 cash. The other $3,000 was $100 a month for 3 years. And it's a way to leverage things. Part of asset recovery is finding it, but also knowing how to use it. Because here's the last part of asset recovery. Even if you find hard liquid assets like a bank account or a vehicle or real estate, you're not allowed just to walk into the bank and grab somebody's money out of their account. Bank won't give it to you, even if you have a judgment against the person. The bank needs a legal process called a writ of garnishment. Again, we're not attorneys, we're not giving any legal advice, but this is just what we see in our experience as investigators. So what you do is you take your judgment that you have, and you take the asset that you want to grab, the bank account, you bring it to the court and say, "Hey court, hey judge, hey your honor, I have this judgment, I want to take this money to satisfy the judgment, just sign off saying it's okay." Judge signs it. Now you bring that to the bank, and the bank will give you the money. The reason you can't just walk into the bank with a judgment is because the bank doesn't know, first of all, if that judgment is valid. Maybe it got overturned. Maybe it's a Photoshop. It's not their job to determine the validity of a judgment. They're not attorneys. Maybe the judgment's already paid. Maybe you had a judgment 2 years ago, and they already paid it. Now you're trying to get double dip. So the bank can't just give you money based on a judgment for good reason. But if you get it validated with a writ of garnishment or a garnishment order or whatever they call it in your county, now you can walk into the bank and grab the money. Or go to the clerk of court and put a lien on a house, or go to the DMV and put your name on their title, or whatever remedy you ask the court to give you. And the court can give you any remedy you ask for. Now you have to ask them for it, tell them what you want, but that's how you take your judgment and turn it into cash in your bank. Question comes up, do you want to call a collection agency? Well, we would say no. People have different opinions. The reason why is because a collection agency, in most cases, is simply a company or a person that all they do is they call people and bother them to try to get them to pay. Beg you to pay money. Bother you to pay money. Just keep calling you. Hey, give us money, give us money. They don't take the action to find assets and actively take assets, seize assets. It's kind of the difference between hunting and fishing. A collection agency is kind of like fishing. You put the bait in the water and hope something bites. Asset recovery in investigations is like hunting. You go look for the asset, you find out where it is, and you go kill it and you take it. There's a difference in the mentality. Because if a person was going to voluntarily pay you your money, even if you bothered them, they probably wouldn't have been through court. They already went through court to try to not pay you the money. The court was a much bigger nuisance to avoid than just some guy on the phone calling you to try to get you to voluntarily give money. So if they went through court and did give you money, they're probably not going to listen to any collection agent that's begging them. Sometimes the advantage that a debtor will say for a collection agent is, well, I don't have to give them any money. It's all contingent. Yeah, that's true. But if it's hard to do, they're not going to spend a lot of time and effort to do something hard that they don't have any money for. They don't know if your debtor has money. They're not going to do an asset search to find out, do they actually have money? So they're just going to have people call up on the phone, very low cost, not expert people, just to try to get them to give money. And the problem is when you sign up with a collection agency, if you look at the contract, very often that contract says no matter how you get the money in the future, you still owe us our share, a third, a half, whatever it is. So even if the collection agency makes one phone call, they get hung up on, and then they just stop doing anything, now they are automatically entitled to anything you collect from that person for the future, period. Again, look at the contract, but that's what a lot of them say. So just be cautious about collection and ask your attorney about what they think about a collection agency strategy to recover funds versus an investigative strategy. And also, don't kind of be disappointed with your attorney if they don't do asset collection. That's not what attorneys do. Attorneys are experts in the law and in litigation and in court processes and court activity. They're not strategic or investigative. They may be able to do a little bit of poking around and some very basic asset searching on LexisNexis or some other databases, but they're also not out there strategically seizing assets for the most part. And they're not trained to do it. And they don't want to do it. There's nothing wrong with them. That's not what their job is. It's kind of like hiring a plumber to fix your fuse box, your breaker box. They're two different things. Now, your attorney many times can coordinate with an investigator and help some of the legal process, but their primary role is the legal application of litigation, judgments, orders, that kind of thing, not the asset seizure. So don't get too disappointed if your attorney doesn't seem tremendously interested to do the asset part. It's not what their role is. Talk about one more type of asset, and that is a UCC. Many times a debtor will have money owed to them by somebody else. UCC financing, UCC filing, if they have a business, a debt owed to them. Probate, inheritance. Look at what's owed to them as a recovery of your asset. Actually, we'll talk about two more. One more. There are other types of tangible assets that many times aren't part of a normal asset search. Things like sports equipment, things like musical equipment, things like tools. Now, you may not think it's a lot of money, and usually it's not, but this day and age, sometimes for a low-level personal wealth, sometimes people have more value in Beanie Babies than they do in the bank, or more value in their toolbox in their garage than they have in the bank. If that's the case, think back to what we said before. Look to leverage it. If that's all their value, they may not want to lose those things, even if it costs more than buying them new again, because there's some value to them. And more importantly, if you show that you are willing to pursue assets even relatively small, it's going to tell that debtor that you're not giving up. Every few months, every year, you're going to be coming after them for 500 here, 600 there. Hey, I saw you bought a new jet ski. I want it. Hey, it looks like you have a new toolbox. I want it. If you're just constantly grabbing every small thing they have, at some point they're going to realize, I'm not getting away with this. I better settle. Because you're not going away. The biggest reason why judgment debtors think they get away with not having to pay is because in most cases, they get away with not having to pay. Because a lot of creditors just don't want to spend the money. They don't want to throw good money after bad. They don't want to put the time into it. They just give up. And if you give up, then you're not going to get anything. The money's not going to come to you magically. It's not going to come to you passively. You have to do some work to get it. And whether you do it, which you can do most of this yourself, or hire an investigator to do it, you can pursue these assets and find out where they are. And once you find out where they are, then you can take the steps to claim them. The person has assets and the person owes you money, you can claim their assets. Searching for those is the asset tracing process. Remember what we talked about. An asset search is not one single search. Each type of asset, called an asset class, is a different search. You don't just do, I want to search for all assets. First search for vehicle assets, that's one search. And then search for real estate assets, that's something else. Then maybe search for bank accounts. Each asset is recorded and the records are in a different place. You're not going to find information on a person's vehicle ownership at the real estate title office. You're not going to find information about a person's bank accounts in the Secretary of State corporate records office. You have to do the search where the records are for the type of record that you're looking for. And each one is separately. The good news is you don't have to do all of them if you don't want to. If you only want to search bank accounts, you can do that. If you only want to search vehicles, you can do that too. But remember, if you want to search for, in quotes, everything, then you have to do each one of those searches. And our website, activeintel.com, will describe all of the different types of assets, where the searches are, how to do the searches, and in different geographical areas, sometimes they're different. For example, in most states, real estate records are held at the county courthouse, recorder of deeds. In a few states, they're at the city level, like in Connecticut, Vermont, New Hampshire. It's the town that keeps real estate records. In some states, it's at what's called a parish. In Louisiana, they don't have counties, they have parishes. So you have to search them there. What about vehicles? Well, most states, the vehicle titling agency is called Department of Motor Vehicles, or DMV. Everybody's heard of that, DMV. Well, in some states, it's done at the Department of Transportation, like Pennsylvania. In some states, like Illinois, it's done at the Secretary of State. So you have to know where to search for the records. Also, with real estate, don't search at the appraiser's office or tax assessor's office. That only has the information on who's paying the taxes. Usually, the person paying the taxes is the owner, but it doesn't have to be. A lot of times, somebody's accountant or attorney pays the taxes, and so that's going to throw you off. Also, sometimes when a property is sold, they don't change the tax assessor right away. It might be a year later. So don't make the mistake, amateur mistake, of searching the tax assessor. Search at the recorder of deeds. And look at those deeds. Don't just look at the owner. Read through that deed, top to bottom. Every word might be a clue to other assets. And for bank accounts, yes, make sure that you do consider the validity or value of bank accounts, but don't only run bank accounts. Look at the other assets because, like I said, back to the beginning, most asset recoveries come from types of assets that are not bank accounts. There are other asset classes. Keep an eye on this channel and our network for more videos about investigations that might be of interest to you as a consumer, a business owner, or an attorney.